We'll go ahead and call the this hearing to order. We obviously have a series of votes that just started, and it's going to take a little bit of time to get through those. What I thought we would do is myself and the ranking member will give our opening statements, and we'll recess for that period of time that we have our votes, and we'll come back and take the testimony from the witnesses. But I want to thank everybody for being here today, particularly the witnesses. Obviously, you've come from a long way, and I appreciate that very much. And today we're going to be listening to testimony on specific tax, regulatory, and healthcare policies that inhibit job creation and economic growth. Running small businesses in a prosperous economic time is hard enough, but during an economic downturn, entrepreneurs face even more challenges. When meeting Friday's payroll becomes the most pressing concern, it is unlikely that small business owners can dedicate the necessary time and resources to expanding their businesses and creating jobs. Even though there has been recent signs that our economy is starting to improve, our recovery from this recession remains erratic at best. As we've said many times before, small businesses need certainty to plan for not only the next day, but also for the next month and the next year. The National Small Business Association recently released its 2010 year-end economic report in which small business owners ranked the top issues that they believe Congress and the administration should address. Traditional issues like lowering the tax burden, reining in health care costs, and reducing the regulatory burden still reign supreme, outpaced only by the demand that Congress and the administration take the steps to reduce the national deficit. Let's take a moment to talk about one of the small business owners' longtime concerns, the sheer magnitude and complexity of the tax code. Entrepreneurs, many of whom have limited resources, are forced to spend their time attempting to comply with the tax obligations instead of growing their businesses. According to the IRS itself, today's tax code has ballooned to 3.8 million words. That's nearly 3 times larger than it was in 2001. Small business owners have long been concerned about the costs involved in providing quality health care coverage for their employees. And over the last 10 years, job-based health insurance costs have substantially outpaced inflation and wage increases. The Kaiser Foundation reports that the average cost of a family premium for employer-sponsored health insurance increased 114% between 2000 and 2010. Only 68% of businesses with fewer than 200 employees were able to afford or offer these health care benefits in 2010. And the outlook is even worse for the smallest firms that employ 3 to 9 people. Only 59% of those firms were able to afford benefits. And since the new health care law passed last year, I've heard from countless small business owners in my district and right here in this committee room that not only will this new law fail to provide them with the health care benefits to their employees, but it will cost them or could put them out of business. As we try to encourage a lasting economic recovery, we must also address the problems that small businesses face due to harmful federal regulation. According to the SBA's Office of Advocacy, the annual cost of federal regulation in the United States increased more than $1.7 trillion in 2008. And the Office of Advocacy also reports that small businesses face an annual regulatory cost of over $10,000 per employee, which is 36% higher than the cost facing larger firms. As more federal regulations are created daily, it has become next to impossible for small business owners to keep track of the associated costs and paperwork. Recognizing our economy and rekindling the American spirit of entrepreneurship must be the central focus of the 2012 Congress. Small business owners who create the majority of new jobs need a government that will work with them and not against them to put our nation back on the path to prosperity. My colleagues on the House Small Business Committee and I are listening to the concerns out there and are ready to get to work to put an end to the devastating uncertainty that has plagued entrepreneurs for far too long. So again, I appreciate everybody being here. I look forward to your testimony. I'll now turn to the ranking member for her opening statement.
Thank you, Chairman Graves. Since the financial crisis, this committee has been closely following the health of the small business sector. This has included holding hearings here and throughout the country, as well as addressing the problems we found through legislation. Now the economy has begun to grow again and a recovery is underway. However, it is clear that there is a long way to go and entrepreneurs are still struggling on many fronts. This hearing will help us understand how much the small business economy has changed and what, if anything, we should do here in Congress to address it. This recovery started in mid-2009 and, according to the Federal Reserve, appears to now be strengthening. GDP has grown for 6 consecutive quarters and exceeds the 2007 end-of-year peak. Today, the U.S. economy is larger than ever, and consumer spending was growing at an annual rate of 4.4% for the last quarter of 2010. As a result, many small businesses are more optimistic than they had been in a long time. This newfound confidence is seen in the most recent NFIB Optimism Index, which is at its highest point since December 2007. Surveys by NSBA and Gallup also showed that small business confidence was increasing. Small firms are also finding easier credit conditions, as confirmed by both the Federal Reserve and the Thomson Reuters PayNet Small Business Lending Index, which we will hear from about today. This is a very positive development since small businesses have been all but locked out of the capital markets for a long time. This positive news is tempered by the challenges we see in the labor market. With losses of more than 8 million jobs in 2008 and 2009, the 4 consecutive months of positive job creation we have seen are simply not enough. The unemployment rate has declined significantly, but we are still not seeing the level of employment gains we need to achieve a full recovery. According to research, small firms have shed jobs at a more rapid pace than larger firms. In addition, they have chosen not to add employees even though they need it, citing the uncertainty they face about sales revenues and cash flows as the top reasons for not doing so. This issue, job creation, is the most important facing Congress today, and small businesses are instrumental to the solution. Responsible for generating 64% of net new jobs over the last 15 years, small firms have typically driven employment gains after recessionary periods. We saw this in the early 1990s and again in 2001. It is important that while we seek to encourage entrepreneurship of all types, we focus on businesses that tend to dramatically increase job creation. These are high-growth firms typically undertaken out of a market opportunity rather than out of necessity. Such firms need plentiful capital, the ability to access a highly skilled workforce, and a business environment conducive to risk-taking. They can grow in size rapidly, and in doing so, can add tens or even hundreds of employees in the course of months. With that said, small businesses of all sizes and stripes remain absolutely critical to our economic health. During today's proceedings, I'm looking forward to hearing both anecdotal accounts as well as empirical evidence about the state of the economy and its impact on small firms. By doing so, this committee can identify the bright spots as well as where entrepreneurs are facing the greatest challenges. As a result, we will be better informed as we try to tailor policy solutions regarding these problems. In advance of the testimony, I also want to thank all the witnesses who traveled here today for both their participation and insight into this important topic. And with that, I yield back. Thank you, Mr. Chairman.
We will go ahead and recess for the whatever amount of time it takes to go through the votes, and we'll be back right after that. Again, I apologize for the inconvenience. We don't always know when votes are going to be. So, committee is in recess for however long it takes. We'll call this hearing back to order, and I would like to explain the light system. When you give your testimony, you got 5 minutes, and the light will be green. When you're down to 1 minute left, it'll go yellow and then red when time's up. If you go over a little bit, I'm not going to break anybody's arm, but we want to try to keep it to 5 minutes. And now I'll turn to the ranking member to introduce our first witness.
Thank you, Mr. Chairman. Our first witness is Mr. William Phelan. He is president and co-founder of PayNet, a provider of risk management tools and market insight to the commercial credit industry. As president, Mr. Phelan has grown PayNet into a firm with the largest collection of commercial loans and leases, encompassing more than 17 million contracts worth $800 billion in loan value. Under his direction, Mr. Phelan oversees the sales, marketing, analytics, and information technology functions of the business. Welcome.
Thank you. Good afternoon, Mr. Chairman, members of the committee. Thank you for that introduction. PayNet is based in Skokie, Illinois. I appreciate the opportunity to speak today on behalf of PayNet, which provides the information that the Congresswoman alluded to. My role today is to help you with insights into the state of the small business economy with quantifiable data, trends, and analysis. As you alluded to, PayNet has the largest database of small business loans in the country at this point. Access to this small business credit information increases access to capital for small businesses. It spurs economic growth, jobs, and it significantly reduces the cost of doing business. I think the perplexing aspect of the small business economy is not its importance to the U.S. economy. The perplexing aspect is how little we know about small business. Limited information hinders the ability of bodies such as this committee to create policies that can help small businesses. I applaud your efforts to better understand the small business economy, and in doing so, to create policies that promote small business. The Thomson Reuters PayNet Small Business Lending Index measures new borrowing activity on millions of U.S. small companies, and it serves as a leading economic indicator. The index declined from a peak of 131 in January 2007 to 66 by May of 2009. This is a fall of approximately 50%. This index allows us to calculate the demand for credit by factoring in credit approval rates. When we do that, we can see that the credit approval rates, in other words, the demand for credit from small businesses, actually fell during that same time frame. It fell from an index of 176 down to 103 by May of 2009. There certainly are cases of small businesses being cut off by their bank, but from just a pure demand standpoint, it appears like the credit applications have declined during that time frame based on the data that PayNet has. For the broader small business economy, it's clear that lower applications are this indication of falling demand for credit. At the same time, the banking system's reserves were expanding by a factor of 1,800%. Even though businesses are beginning to borrow more and are finding it easier to pay their bills, small business owners are not yet ready to declare victory over the recession. The index, as of December 2010, confirms the recovery in small businesses is gaining, and it's starting to get on solid financial footing. The construction industry increased more than any other sector last month as those companies began to borrow more money. The transportation, healthcare, and farms all expanded borrowings during that same time frame. Surprisingly, the professional services companies that we track showed borrowings were flat over that time frame. There's sobering facts about the economy remain before us. We have high unemployment, we have improving but still very low consumer confidence, we have modest income growth. Another sobering fact, the index is still 6% below its 2005 levels when it began. So we're still below, at this point, the level that the index was at in 2005. And that was 6 years ago. Most small businesses are dependent upon domestic demand, and they often lack the resources to deal with trade barriers and tariffs, and they're shut out of the booming growth in emerging economies. This 20% uptick that we reported last month in the index may prove to be illusory as well. In speaking anecdotally with a major seller of equipment, we found that much of the buying was to replace old, worn-out equipment rather than to invest in growth. Additionally, many of these companies took advantage of the year-end tax credit to realize that benefit for their organizations. When you consider the effects of the recession, the small business owner's survival is a testimony to their resilience and their grit. Their demand for their products and services, in many cases, cratered. Their regulations increased, uncertainty abounded, and payment terms extended to beyond 60 days. Yet the small business owner managed to not only stay afloat, but to reach solid financial footing. Loan delinquencies are down to 2.45%. These are levels not seen since 2006. Loan delinquencies have decreased 43% over the last year for small business loans, and that's the largest year-over-year decrease on record. I think transition is the best way to describe the small business economy. Rising regulatory costs, high taxes, technological change, and increased competition are forcing small businesses to seek more efficient and sustainable ways to do business. We are seeing a definitive recovery start to emerge in small businesses. However, market conditions such as these regulatory costs, health insurance regulations, fewer markets for products, these present challenges to growth and even survival still for small businesses. The recession has forced many small businesses to get leaner and smarter. They've introduced technology to cut costs, to increase productivity, but unfortunately that's resulted in fewer jobs. The trick will be to help these unemployed workers acquire skills for the jobs of the future. Unknown future costs for regulations, healthcare, and taxes heighten the uncertainty for the small businesses. Cash hoarding is the best indicator of the uncertainty that small businesses are feeling right now. Businesses are building cash to levels not seen since 1963. They're doing that rather than spending, borrowing, and hiring employees. Removing that uncertainty wherever it exists will go far towards encouraging businesses to spend, borrow, or hire, which in the long run will assist to create jobs and further economic growth. Thank you, Mr. Chairman, and members of the committee for the opportunity to address you today. I offer to present further analysis and data for your use if you so wish.
Thank you, Mr. Phelan. Next, I'll turn to or yield to a gentleman from Tennessee for the introduction of his witness.
Thank you, Mr. Chairman. Our next witness today is Mrs. Terry Frank. Ms. Frank is the owner of Nature's Marketplace in Oak Ridge, Tennessee. Ms. Frank is a graduate of Middle Tennessee State University and is also a current board member of the Anderson County Economic Development Association. Ms. Frank took a bold step and opened her own small business in 1993. Ever since that time, she has faced the problem millions of hardworking Americans face every year: oppressive taxation and regulations that threaten the livelihood of small business owners. Mrs. Frank's perspective on small business issues is more than welcome, and we thank you for taking time out of your busy schedule to come be with us today. Mrs. Frank.
Chairman Graves, Representative Velasquez, Representative Fleischman, members of the committee, thank you for the opportunity to testify. Nearly 20 years ago, my husband and I sought the American dream of owning our own business. With very little capital, we opened a produce market that eventually expanded into a busy market with gifts and an eatery where we prepare sandwiches and soups and bake desserts. We love our small business and the blessings of home ownership it has afforded us, not to mention that we were able to raise our 3 sons alongside us, much to the amusement and fondness of many customers. My oldest son is now attending college at the University of the South at Sewanee on a presidential scholarship. Our second son has been accepted to Yale, and our youngest son is a 5th grader at St. Mary's School in Oak Ridge. Our customers and our employees have taken part in the shaping of these fine young men. One of my favorite quotes is from Patrick Henry. I have but one lamp by which my feet are guided, and that is the lamp of experience. My experience of owning our own business has been one of great commitment, numerous sacrifices, and the foregoing of many pleasures for the possibility of future reward. Many of those experiences have been rewarding, others frustrating. I often wonder if it's not easier to just work for someone else than it is to navigate the tax code. Engaging in commerce should allow for the simple reporting of profit or income. It should be so simple that any producer should be able to be a good citizen and comply with the law. But as it stands, even with a college degree, I have been utterly lost on many occasions. The tax code is a maze of riddles, a game for those who seek to find the loopholes, for the sophisticated to work various formulas in order to pay less to Uncle Sam. Until 4 years ago, I performed all of our taxes myself with a tax program until I finally relented and started paying a CPA. Time is money and money is time, and the U.S. government robs the small business community and its own coffers of potential revenue by eating up hours of time in bookkeeping, reporting, and compliance. Keeping up with the tax changes that Congress is considering can be a full-time job itself. The 1099 requirement that you discussed in this committee here last week would only add to that nightmare. The tax code should be so simple that it actually serves as an incentive to bringing more people into the ranks of small business. Instead, it stands as an intimidating obstacle. My husband and I depend on a network of other small businesses to produce our goods. Every element of our business network shares a sense that we are viewed as, well, by government, as cows to be milked. We sense that we are viewed as exploiters of people. I speak not just for myself, I discuss my testimony with many friends. Our profits, if we have any, are not windfalls. They are produced by our hard work, our risk-taking and ingenuity. Profits are not something nasty to be punished and taken and given to someone else. The small business community and the great middle class, of which it is part, currently are carrying more than their fair share of the tax load. Congress should not remove dollars from the economy and re-inject them in a so-called stimulus game of picking the winners. Small businesses should be allowed to keep more of what we earn. When we do, we give our economy and the federal tax coffers a better return on our investment, and we can provide more jobs to others. I will close by calling for a simple solution to growing the small business community. Truly reform the tax code. Don't micromanage us and let us keep more of our hard-earned profits. But specifically, I call for a far better tax code. The Fair Tax, H.R. 25, taxes consumption instead of earned income, so it does not punish initiative. A flat tax sounds simpler, but the fine print could wind up hurting small business if we can't deduct our operating costs. Federal policy itself promotes distrust and resentment. It pits we the people against government and neighbor against neighbor as a prevailing sense of unfairness festers and then divides us. We need a stable dollar and tax and monetary policy that does not intentionally hurt small business. Monetary policy of the Federal Reserve purposefully manipulates the dollar's value and interest rates. Such policy has served to dry up lines of credit and loans to small businesses of my friends and even to me personally. Small businesses cannot thrive and provide general prosperity so long as it is oppressed by federal policies designed to serve the interest of Wall Street financiers. We need cheap and affordable energy in the operation of our businesses, and most importantly, we need the stability that comes with an end to micromanagement of small business. There can be no growth when business owners like me are constantly fearing what lies around the corner. Thank you for hearing my views today.
Thank you very much, Ms. Frank. We'll next turn to the gentleman from Florida, Mr. West, for the introduction of his witness.
Thank you, Mr. Chairman and Madam Ranking Member. Our next witness is Mr. William Feinberg, president of Allied Kitchen and Bath in Fort Lauderdale, Florida. He founded his company along with his brother Joe in 1984. Bill is currently a member of several industry trade associations, including the National Kitchen and Bath Association, and he serves on the board of directors of the Fort Lauderdale Chamber of Commerce. Mr. Feinberg is testifying on behalf of the United States Chamber of Commerce today, the world's largest business federation representing the interests of more than 3 million nationwide businesses, as well as state and local chambers and industry associations. Welcome, Mr. Feinberg. You have 5 minutes to present your testimony.
Thank you. Chairman Graves, Ranking Member Velasquez, and distinguished members of the committee, thank you for asking me to testify before you today on the state of the small business in our nation with a specific focus on the issue of health care. My name is Bill Feinberg, and I'm president of Allied Kitchen and Bath, which is located in Fort Lauderdale, Florida. I'm here to speak to you today on behalf of the U.S. Chamber of Commerce. In 1984, my brother Joe and I founded Allied Kitchen and Bath in Fort Lauderdale, Florida. Our two other brothers, David and Rob, also joined and worked for the company, making it truly a family business. We take great pride in having earned an outstanding reputation in our community. In early 2007, my brother and I pursued our dream to expand our company. We obtained financing which enabled us to tear down our old facility and build a new 2-story, first-class, 15,000 square foot showroom. We literally invested not only our life savings, but also our reputation. At times, we wondered whether we could survive. We're continually optimistic about the future, but this is not to say that things are easy or that we are achieving the level of financial stability and security which we had anticipated prior to this economic downturn. We know that achieving our goal of exceptional customer service and satisfaction is only possible through our staff members. In fact, many of our staff have been with our firm for more than 15 years now. At this time, I have 35 full-time employees, as well as a few part-time employees, and others that we use on a subcontract basis. At the peak of my business, we employed about 45 people. With the severe economic downturn, especially in the building sector in Florida, we tried our best not to lay off anyone. Myself and brother, as co-owners, personally sacrificed everything. We cut our inventory, we tightened our belts in every way, trying to meet cash flow needs while waiting for business to pick up and consumer confidence to return. Ultimately, we were forced to lay off people. To be blunt, it's been a struggle, and at times we've been hanging on just by a thread. I believe things are slowly getting better, but even as the economy seems to inch toward recovery, businesses like mine have to worry about new laws, new regulations, new challenges created for us by Congress. Allied is a very good business on a sound financial footing, but we're not flush with cash. As far as health care and health insurance goes, we continue to believe, as we always have, that offering health insurance to our employees is a valuable benefit. It's also critical to obtaining new employees and retaining the existing ones that we have. Right now, Allied offers a Blue Cross Blue Shield PPO plan to all of our employees. We pay 50% of the premium. Every year, we pay more and more money, but we get less coverage. Last year, we got a 20% premium increase. This year, it would have been worse. We were able to keep our increase to 20% by raising the plan deductible from $500 to $50 per person. I'd like to keep offering health insurance to my employees, and I'd like Allied to continue to grow and be able to create jobs and prosper. However, with the new health care law, it's making it much harder for us. I know that some of our premium increases are due to the new rules in the health care law. We have less leeway in how we can control costs by changing plan design, and it makes it harder to afford insurance. I'm hopeful that in the next few years, Allied will grow again and be in a position to have 50 employees at a minimum. But I know that in 2014, the new employer mandate starts. The mandate says that an employer with 50 or more employees must offer government-approved health insurance or pay steep fines. Is this the message Congress meant to send to businesses like mine? Wouldn't incentives, rather than penalties, have been a better way forward? Unfortunately, there's no way I'll be able to hire a 50th employee once this mandate kicks in, at least as I understand it. Hey, I'm just a kitchen guy. Apparently, if I have 50 or more employees and I do offer health insurance, I'll face steep fines because of the complicated formula in the new law that lets the employees opt out of our health insurance plan, receive a government subsidy, and fine the company $3,000 each time this happens. How can this make any sense? It simply doesn't. The uncertainty caused by just the employer mandate alone can hardly be emphasized enough. I hope Congress will repair this provision as soon as possible, regardless of the plans to repeal the full health care law. I was hoping that health care reform would mean more competition, lower costs, better quality care. I don't see how the health care law will achieve any of that, though. Plenty of common sense ideas that would help small businesses like mine were just left out. The law did not include the meaningful medical liability reform. It doesn't give Allied the opportunity to buy health insurance from companies outside Florida. And it doesn't allow Allied to freely band together with other small businesses to get better rates on insurance or form reinsurance pools. Doesn't even fix the problem of cost shifting, where low payments by Medicare and Medicaid providers translates to a higher insurance cost for small businesses. I hope this Congress will take a serious look at the policy changes and help lower health care costs for businesses like Allied so it can keep offering the benefits our employees so value. In conclusion, we are hopeful that we have weathered the worst of this economic storm. We're cautiously optimistic about the future. That being said, this uncertainty being generated in Washington, D.C. by a dizzying array of unanswered questions about health care, taxes, energy, and regulations impacts our decisions and hampers our ability to effectively plan for the future. We need answers. We need clarity. Perhaps most importantly, we need these issues to be resolved in a manner that encourages entrepreneurism, investment, and job creation. I'm a business owner, and the livelihood of my employees and their families depends on the decisions I make. I say this similarly, the decisions that you make as members of Congress have a direct impact on my business and my employees. I hope that you would ask that you continually be mindful of this reality as you consider the weighty issues facing our nation. Please, invest in small business and help us. Work with us, not against us. And we'll create the jobs necessary to put Americans back to work. Thank you for this opportunity to testify, and I look forward to your questions.
Thank you. And I'll now yield to the gentlelady from Washington, Ms. Herrera Butler.
Thank you, Mr. Chairman. And it's my honor today to introduce to you all Dixie Colditz. She and her husband, who's in the back corner with their little one asleep, co-own two businesses, Open Box Creations, a wholesale home decor company, and also an agency that provides care for developmentally disabled adults. Dixie is here today to talk specifically about Open Box Creations, which is located in the small town of Cathlamet, which is in the middle of my district in Southwest Washington, the region I represent. I was meeting with employers across my district a few weeks ago and had the pleasure of reconnecting with Dixie and her husband on that trip. And to me, she represents all that is great about America and the American dream, and she's going to tell you about that. She was raised in South Africa, came to the United States to attend college, and it was there that she majored in public relations and journalism, and also met her husband and future business partner, Ross. She came to the U.S. in '95 and became an American citizen in 2004, and is now the mother of 7 children and the owner of 2 businesses that employ more than 150 people, only in America. Now, Dixie is facing a set of challenges that make it extremely difficult to continue as a small business owner. And rather than have me recount those challenges to you, I'm going to turn it over to an expert witness who knows firsthand the difficulties that small businesses are facing today.
Thank you, Mr. Chairman and members of the committee. I'm going to talk about regulations, and we deal with this when we bring in our containers, which is our shipments that come in from Thailand. Our products are handmade, the flowers and the vases. And what happens is when the containers come in, they get delayed by customs. And that becomes really hard because it adds more fees to what we're bringing in. And so what we found, so I'm just going to read some of the stuff that we have that has been happening. I'll relate this with the container that we just recently received. So most of our containers, when they come in, we fill out an ISF form, which is an import security filing form. And this form, it just tells everything that's on the container. And what happens is now customs requires that we file this form before the container leaves the country of origin. Now this becomes really hard because the shipping company can't give us the information 2 to 3 days before the container leaves. And we understand that homeland security is very important. However, before the economy took a downturn, our containers were not scanned as often as they are right now. And we have agreed that the customs scans and inspections were indeed random. Now all our shipments are scanned or inspected at our expense every single time. It feels like a government money-making scheme. The fees are higher than our labor costs to load and unload. It seems that because they're not footing the bill, they do not care how long it takes, and they can even use whatever facility that is convenient to them. Even if it means taking containers that have been trucked to Portland, Oregon, our home shipping port, from San Francisco, back to San Francisco, and then back to Portland to be scanned. This just adds more fees. Why do we then have to pay for their inefficiencies? There has to be ways that they can be accountable to us or share their expenses. Maybe then they will work faster, efficiently, and cost effectively. When we receive the shipment, normally I pay about $350 when they scan my product every single time, $150 of it for the delays and $150 of it that goes to customs for them scanning it. Now my bill was about $822, which is a little bit double, almost triple what I've paid before. with the ISF form, if we do not fill, the new rule that they just enacted is that if we do not fill this, we will be penalized about $5,000, which is a lot of money for most of us. And like I said, we cannot control how we can get the information from the shipping companies. And so when they add these things, it just adds more and more things that we have to deal with. Also, when we bring in our containers, most of our product, like I said, they're handmade. It's something that's not produced in the U.S. We now have to pay duties. And this is done through the general, it's called the GSP, which is the Generalized System Preference. Now, with the GSP, this is something that the government started a couple of years in 1976 to help developing countries so that they can be able to sell their products to the U.S. Now, with this system, now all of our products, we now have to pay duties when we never used to pay duties. I had to pay over $800 on our products, and I've got several containers that are coming in. And when they do this, it just adds more and more fees. I'm not complaining about the fees. It's just the fact that we're getting fees from all different directions. And the more fees you add, the more I can make profit. And if I can make a profit, I can employ more people, which is really, really hard. And I know that the generalized system is being worked on so that it can be renewed. But if it's not renewed, it's now a new tax. It might not be called a tax, but I think it is. One of the other things is if you put less regulations, what that does is that it gives a company like mine, a small business, to be able to work with a big company. We now have an opportunity that we get to work with Costco, which one of my friends called Costco. He said it's like David working with Goliath. Now, if you add more regulation, I can have that opportunity. What we now have is that I can sell my products through Costco instead of them. You know how everybody says that the big company kick out the mom and pop shops. Now they're bringing us in, which helps us so that we can hire more people, and they also can employ more people. So this is a system where we're now working together. We're having a mutually beneficial system. So I say do not regulate us. Do not over-regulate us. Give us some rules. We expect some rules. And we're fine with having a few rules here and there so that we can all work together. But the more you get into giving us so many rules, you're taking away our opportunities to give. And I also think that we've also been vilified. We're being told that we want to make profits all the time. Profits, there's nothing wrong about having profits. That's part of the American dream, is that we can achieve anything, and at the same time create jobs. So I say less regulation, give us the opportunity so that we can partner with you and create more jobs. I am thankful for this opportunity, and I hope that I was able to give you some information that could be useful. Thank you.
Thank you very much. Now we'll move to questions, which I have a question for Mr. Phelan. You mentioned the credit markets thawing a little bit. I'm just curious where you're seeing the majority of that. Small banks, larger banks, or lending institutions. And I'd also be particularly interested in where you're seeing that directed. Lines of credit, or is it more on new business startups, that sort of thing?
So the question is, are we seeing the credit approval rates increase in different types of institutions, whether it's a bank or an independent finance business, a large bank or a small bank?
Is it, where are you seeing it most? Large banks or small?
Yeah. And I think to be honest with you, on the data side, we haven't drilled into the data to that kind of degree of specificity to be able to tell you that. We can tell you that most of the data that we collect is from on the credit approval side is from the larger institutions, and so I think it's representative more of the larger institutions where we've seen just the credit approval rates increase from a very low point in May of 2009 to not quite to pre-recessionary levels, but it's certainly gotten much closer to where it was before the recession.
Are you seeing that more in? We were hearing a lot about lines of credit being, either banks were requiring more equity for the same line of credit, or they're just reducing their line of credit for the same equity that they had put up. Are you seeing that loosening up just a little bit?
Again, I apologize. We haven't studied in that kind of depth. We could do that for you if that's something you're interested in. We do know overall, though, that the credit applications are are increasing, the credit approval rates are increasing. But I wasn't prepared with that kind of depth of detail. I could provide that to you at some further point.
If you could, I'd appreciate it. But,
Sure,
but,
I could do that.
I do appreciate it. I know we got a lot of questions out there, so I'll go ahead and turn to the ranking member.
Thank you, Mr. Chairman. Mr. Phelan, you noted that the small business lending index has increased 20%